Good morning. It's Jonathan Barratt with the weekly debrief, the war report, the week ahead report, and it's going to be quite an interesting week, I think, this week. We haven't got a lot of data, but we've got the FOMC rate decision coming in on Wednesday, and actually on Tuesday, and also we've got IP or IFO index out of Germany, and we've also got durable goods, which closed the week in the US, which obviously will be a good leader as to whether or not we're actually moving out of this recession in the US. That is not us, not Australia. Okay, so let's get into the report. And first of all, let's have just a little bit of a recap as to what happened on Friday. And so we're nice and right in there and fully informed as to what's happening there. Okay, that's just coming up now. Okay, just a little bit of news there. Home sales news probably rose, the sign that the real estate market is stabilising. This is all quite important because this is all this building confidence we've been talking about for the last couple of weeks. So when we see that build, that confidence story, it's confidence that will really help us to move out of this recession in the US. And as you can see with President Obama's comments, very positive outlook, and outlook with spend, outlook with infrastructure, all these things suggesting that people will dip their hands in their pockets and spend a little money. And that's, of course, what we want to see. Not like in Japan, where people just look for savings. Okay, the Dow was up 13 at 10,607, S&P up 0.93 at 11.25, Nasdaq was up 12, so pretty quiet on that front. Europe still a little bit of the jitters there across Europe. That's been about 3-4 straight days of negative price action. The top 50 was down 27, the FTSE, as you can see, down 31. The CAC was down 14, the DAX was down 39. So still quite a little bit nervous there, a few people quite nervous there. We were down 22 points at 4,637. So when you look at across the board there, a little bit negative, but obviously we want to see a little bit more lead out of Asia in terms of how we'll actually feel how Australia goes. But still marking time, and I think the sentiment in Australia is still relatively positive. So I'm still guided by positiveness on that. We'll be able to see it in a few charts in a second. Okay, just a quick look also at just say the commodities. Gold in itself had a strong move that came back a little bit over the course of last week, and we'll get to that in a sec. But crude oil was down 0.27. The big variance between Brent and West Texas, keep an eye on that. West Texas seems to be hounded by obviously some major selling here. We've broken below 74, and you'll see that on a chart. Very important because this could actually see quite a drop. So just be careful there. I'll show you that in a chart. All very strong nights across the grain: soybeans, wheat, sugar, you name it. Oats, rough rice still going through as well. All very solid. Copper had a good strong night, up 0.82% at 352.20. I like the look of copper and have done for some time. So I'm quite positive there. Gold up $3 at 12.77 and silver up 0.045 at 20.81. So that in itself quite positive across the board. Okay, let's have a look at just a few of the charts and try and pick a few of those trends. Now, one couple of things I want to focus on here is let's have a look at this. Well, you can see it here anyway in the crude. And we'll go from the crude from an hourly to a daily. Let's see if that should come up pretty soon. If not, we'll just skip it. There it is there. As you can see, it seems to have broken down from this area through that trend line. That can indicate to me a move down to this level again. So I think it's a little bit softer. And I think it's softer just purely on the supply side. And this is normally a time of builds anyway as we head into the winter months. But I think people are saying we've got enough on tap, which we do have, there's no doubt about it, for current needs. So it's certainly a supply issue, a lack of demand, that's causing that to come under pressure. Let's just have a quick look at that daily chart. That's just coming up now. Yeah, as you can see, I don't like this indicator here. A little bit more room here, and when you look at this could be a start of a move that does see it quite drastically lower. But let's be guided by it. It has broken a trend, and our momentum indicators are not that positive. So daily close below 74, in my mind, sends it a little bit lower. Let's have a look at the copper chart because this is where it's interesting. Copper, we know, is in a structural deficit. So that basically means that we are consuming more than we can produce. That should put a price expectations a lot higher. And as you can see, we're riding on these areas of highs here. 349, 352 was the high, also this high up here at 358. My feeling is that this looks quite positive, and if we can get through these areas, which I think we have, then copper has the ability to continue to trade onwards and upwards. So I actually like looking at that. Having a look at gold, 1274 under a little bit of pressure. Did have a high there at 85, but then came back. But as you can see, it's certainly up here, so momentum's with it. And although it looks overbought, sorry, there are expectations that it should hit that 1300 level. Be guided by these breaks. Be guided by a couple of breaks here, because if it does get through it, then obviously 1300 the market will just gravitate towards it. Okay, having a look at some of the others, our currencies, and then we'll go and look at the major report. Aussie right on those highs should be quite strong, but if it fails up here, then she comes back. A lot of importers we're finding are actually covering some now because it's just a good price to start to sell, even if you're looking for 12 months out. So even if you do 25% of expected gross, so it's not a bad deal to actually look at. Okay, all the others are looking good, corn, wheats, and soya. We've all trades which we've all been positive about for a long time, and continues, certainly corn and soybeans. Certainly like the looks of those ones. Here's a quick chart at soybeans, and you can see that this whole structure is, in my mind, exceptionally positive, and we're looking for really good things out of the soybean market over time. Breaking through those trends there, probably in my mind suggests it does trade higher. Okay, let's have a look at the numbers which we got out this week, all the important ones. And obviously a Tuesday, not a lot of important ones out on Monday, but Tuesday we've got housing, we've got home sales and building permits in the States, and obviously widely watched. Also FOMC rate decision. Interest rates are expected to remain there at 0.25%, so no real change there. Also ABC consumer confidence. Looking on a Wednesday, UK Bank of England comments and monetary policy meeting, so that'll be interesting. Industrial new orders out of Euro, so we're looking towards that, but really not too much out there apart from the usual data we actually see in the States. Moving on to Thursday, Euro PMI, a lot of the PMI data, Purchasing Managers Index, Euro, Germany, like, and we've got leading indicators in the States, which is going to be something we want to keep an eye on, so quite important there. Thursday, Germany, IFO index, obviously an index which is normally quite volatile, but it'll certainly see where the lead economy is going there in Europe, and that's important. We've also got durable goods, and that's expected to be down. Now, I've got a little chart here on the durable goods, so let's just have a quick, here we go, durable goods. Well, it's actually come through from the factory. Here's durable goods orders there. And as you can see, it is all coming off a little bit of a high. I've had terrific growth. That can be quite easily explained by the infrastructure spends and also the measures to loosen and put money in the economies. This is all GFC stuff which has caused it. So it's perhaps a little bit too much, too hard. And that's why we're seeing things come back. We want the economies to work by their own, work on it where they clear profitably. But as you can see here, this is all the spends that we've had as a result of the governments and the government bailouts and also the quantitative easing. So as you can see, it's translated to some pretty strong numbers. But as you can see here, they are coming back. And I think our expectations are that they should continue to come back, but they will come back to where the market will clear profitably pretty soon. So the market on Friday coming out is expected to be a down number, and I think they're the expectations. So I think that'll be something we'll just keep an eye on as we go to the week. New home sales as well, that's expected to be up. We've got to look good numbers starting to come out of, in terms of housing out of America, and that's something we can focus on quite nicely. Okay, well that's about it for the week ahead report. Most important things to keep an eye on are those numbers coming out. I'd still like to look at copper. Grains we still like, no problems there at all. But have a look at copper because it is at the top end of the range, so it's always a bit nervous trading at the top end of the range. But I think there's some good solid fundamentals. If you are going long, just always remember to put your stop in because you are at the top end and you are expecting that break higher. But put that stop in there just in case because timing is key and we just might be off on timing, but we still feel pretty okay about that copper market. Okay, well that's about it. Have a great week and we'll try and talk to you during the week. Good luck.